Talk to us about the outlook for the cement industry. We know that the government has put down a very ambitious infrastructure program above 860 billion rands. That should provide significant business for construction and obviously by synergy the cement industry. Is that your view?
Most definitely. I mean, if you look at cement in South Africa, the single largest driver for demand is the housing sector. Now, what we are waiting to see is whether government is going to come to the party in terms of low-cost housing development. If that does come through, then we expect demand to pick up maybe late this year and beginning 2011, we expect demand to go up.
All right. Now, we know that within the residential property sector, there's been a bit of depression. People are not investing in property as much. The prices and the sales volumes picking up 8% year on year, looking much better than what it was at the height of the recession, but definitely not a growth point for the 2010 outlook. How will that affect the industry?
I mean, going forward, if you look at the other sectors, you look at mining, they constitute a very small segment of the market, maybe 1.8 tons or 1,000 tons of cement. So really what the cement industry is waiting to see and what they're hoping for is a revival of the residential construction. Now, despite the depressed demand from residential housing, it's still the single largest market segment for cement producers. And of course now you see, just as PPC announced, that they are looking at markets outside South Africa.
Right.
This is likely to happen with all cement producers in the country, and I think countries like Zambia, if you look at Zimbabwe, Botswana, they'll still, I think those are the markets that the cement producers in South Africa will be looking at.
Let's talk about the pricing of cement, Litya, in the sense that for many construction companies, that's really where what eats into their operational costs is cement. How is cement priced, and how do we justify high costs?
In terms of pricing, really, South Africa can be considered to be a high-cost production location for cement manufacturers. But what you need to understand is the final cost of the cement in South Africa. You can say approximately 30% of the total cost or the total price is distribution costs. As you know, about 99% of the cement produced in South Africa is distributed via the road network, and this is extremely expensive. As the oil price goes up, we expect the prices to remain high, and I don't see price of cement going down. And we know recently there's been an issue of price collusion or market sharing, and the Competition Commission is looking into this. And I think what this has effectively done is to make, I think the cement producers in South Africa are increasingly looking for markets where they can offload some of their product.
All right, now we know that today we're anticipating a major announcement by the Chinese concerning their investment over $200 million in terms of setting up a cement plant. What's that going to mean for the industry?
I mean, currently, if you look at the cement industry, you have four key players. That's Lafarge, NPC, PPC, and Afrisam. These four companies account for about 92% of the total cement sales in South Africa. And a recent entrant into the cement industry is Sepaku, which is still, I mean, the deal is still, or they're still looking for funding or still looking for financing. And I suspect that the Chinese are actually taking up a stake in Sepaku Cement. Now, once Sepaku comes online, which initially it was estimated that it would be around 2012, but I don't think that will happen. Maybe if it's 2012, it will be late 2012 or 2013. Now, when this happens, we expect Sepaku to account for about 10% of the total production capacity in South Africa. Depending on when this project is actually completed, we expect there to be a shortfall in demand, in supply, say late 2012, 2013, if Sepaku doesn't come online. So I think the Chinese coming into the South African cement industry right now is actually much needed, and it's a timely investment.
All right, earlier on when we mentioned the news story about the Chinese coming through, that you weren't that optimistic about the situation. Why?
No, I think just talking to that business cycle, and we're talking at 2012, 2013, in bringing in this extra supply. At the moment, though, there's just too much supply. There's a lot of capacity, and that's because of these long lead times to put these plants in place and get the kilns going. So, we saw PPC had this huge dwaalboom expansion there, brought on a lot of extra capacity. They're still looking to add more. Right. They're producing in Zimbabwe and other territories. Right. So we have come from a couple of years ago, as I talked about, importing cement just because we didn't have enough. So we could get back to that situation. We do need that residential sector, though, to kick in to get that demand back up.
Let's talk about the discrepancies between residential property and basic infrastructure within South African industry, because if the residential property cycle is not moving as quickly enough upwards and you're not using as much cement within expansion of mines and the like, then what are the prospects for the industry?
Yes, you need the residential sector to kick in and grow, because most of the cement is sold in bags, and that goes to the residential sector. So if that part of the economy is not growing, if we're not adding, not building houses, it's going to just reduce the demand for
And
cement.
what about expansion into new markets? And I want to also ask Litya this one, but you first, Craig. We know that within other African countries, there's been an issue about the importation of cement and the need to protect local manufacturers.
Yes, I think we were talking about exporting now, looking for export markets for the excess capacity that we've got. But also on top of that, you've got these huge distribution costs. So if you're going even further out, that's just going to add to the costs, probably make them less productive, less competitive. So that has an impact on the landing price in those other areas of cement. So that's a concern.
Litya, I know that you mentioned expansion for South African firms into the SADC region, but if they were to be more ambitious and move further north into East Africa, they might hit a few stumbling blocks, in the sense that there have been calls by local manufacturers to protect the industry, the local industry, by imposing import duties on cement manufacturers. I don't know how far that's come in terms of interventions by the various customs authorities within the East African community, but there are concerns that you can't nurture local industries in the rest of the continent if you're going to allow for a flooding in from other parts of the continent.
Yeah, I mean, if you look at, that's the politics side of business, but if you really look at cement production in Africa, outside Algeria, Egypt, South Africa, and some extent Nigeria, there's very little production capacity in these countries, and you see that in East Africa, as infrastructure spending goes up, Tanzania, which is the leading producer of cement, is not able to meet that demand. And I think the only sensible thing to do would be to import cement. Now, whether they're going to remain open for South African producers, or whether it's going to be viable for South African producers to export to those markets is something else. But what I foresee is the likes of PPC or Lafarge to increase their production capacities in these countries. I know that Lafarge is already looking at expanding production capacity in Zambia, because Zambia, where Zambia is located, it's an ideal location to service part of, you can service Malawi from there, Zimbabwe as well, and up north to Tanzania as well. And DRC and Angola are close by as well. So most likely, there'll be politics about protecting the local industry, but capacity in these countries is not enough to meet the infrastructure expansion programs that they're talking about.